Welcome everyone to the Charts of the Day video for July 23rd, 2019. Today we're going to take a look at automobile manufacturers. As you can see pulled up on my screen, Ford Motor is one that we've covered pretty extensively in the Stockwave service, and one that is still sporting one of the better looking patterns here off of the December low. And we see the potential for a long-term bottom potentially struck at that December low following this large expanded flat that began all the way back in 2011. Now, it's not necessarily a cycle 1-2. It actually, based on larger charts that I've seen, could be an A and a B wave of a bigger diagonal. But in either case, that still allows for plenty of upside over the next several years, assuming that price continues to cooperate with the bullish pattern going forward. So what we're looking for here on the daily chart is 5 waves up off of that December low to fill out as a leading diagonal. Now, we did make a marginally higher high here back in July, so technically the absolute minimum requirements for 5 waves up as a leading diagonal have already been met. But really it would look a lot better, a lot more convincing as 5 up as an LD if we can get one more push higher here as wave C of 5 to complete the 5th of that leading diagonal. So support for wave B of 5, if we are going to get one more push higher, is between this 382 to 618 retrace, $10.07 to $9.78. So we've already touched the upper end of that support region, potentially enough to finish off this wave B and ready for price to head back up in the wave C of 5, but there is room down to that 618 retrace at 978 if price wants. However, breaking below there would be a warning sign of a more significant top already in place. Next up, let's take a look at Tesla. Bigger picture on this chart, the potential for price to have already completed 5 waves up since the all-time low back in 2010 after it IPO'd into the high here in 2018 is what we're watching. That can be a larger cycle degree wave 1, but that means that we're probably just in the beginning stages of a larger correction as the cycle wave 2. So under that assumption, counting this initial move down into the recent June low as an A wave and price now filling out a B wave bounce, corrective B wave bounce, it seems like there is room for more near-term upside in wave C of B, though. We have a nice confluence of resistance kind of in the 285 region, which is the measured move 100% extension fib in relation to the size of wave A, the 618 of retrace of the decline down into the June low, and also just about where the 200-day moving average resides. So again, there's room for more near-term upside in this move to around 285, and then hopefully turning back down from there. Next up, taking a look at General Motors. This chart, when we zoom out to the weekly, looks like a large A, B, and now an ending diagonal C wave to the upside. So as long as we're continuing to make higher highs and higher lows in this move up that we've seen since the October 2018 bottom, the potential for price to head to a new all-time high here, maybe even up in the lower to mid 50 region, is what I'm watching for. So if price is going to make its way up to that lower to mid 50 region as what would be wave 5 of the ending diagonal C, then we likely have an A and a B already in place within that 5th, and price is now going to fill out 5 waves for the C of that 5th. So under that assumption, I'm going to lean towards an ending diagonal for that C wave based on the price structure so far off of the recent June low, and that would likely suggest that price is nearing completion, perhaps room for a little bit higher here near term, but nearing completion of the initial wave 1 of that ED to set up a corrective pullback as wave 2 into probably a 50 or 618 retrace of this move up, depending on where we top. Next up, let's take a look at Ferrari, which is under the ticker RACE. The move that we've had since the 2016 low after it IPO'd is pretty impressive here, but it continues to look like an impulsive 5 waves up nearing completion. So we have the initial 1-2 here, then that very strong trend, upward trend as the wave 3, pull back into the December low as a 4th, and what should now be that final 5th wave of the impulse. So no clear indication the price has completed that 5th wave up, even though it's easily satisfied enough upside for it to be considered complete. However, until we start to turn back down, make some lower lows and lower highs to indicate a near-term trend change, it could easily push a little bit higher with 181.35 as the next fib resistance above. Moving on to Toyota, ticker TM. Here, this is actually a monthly chart, so going all the way back to 1974, that's as much data as that I have. It counts actually very well since that 1974 low as a larger cycle degree impulse. So this would be the cycle 1-2, then we have 5 waves here within the cycle 3rd, and possible running 4th wave flat. It's kind of since the low that we had in 2008 that the price structures getting a little bit more messy, a little bit less reliable, but also works decent as an impulse since then. If you count this as the 1-2, then a nice 5 up for the 3rd into pretty standard fib extension for a 3rd wave. And then since then, not really the clearest whether or not our 4th wave has completed or if it still needs another jog back down to around 100 before attempting the 5th higher. Some other possible interpretations would be a triangle where this is an A, B, C, D, and you get a small fade as an E wave before continuing higher. Otherwise, if price does continue to just break out directly from here above the prior highs, then the 4th wave may have actually completed back here in 2016, and the overall 5th is unfolding as an ending diagonal. But that should kind of lead up to the 190 to 200 region once we do fill out that final wave 5 to complete the cycle 5th of that larger impulse, going all the way back to 1974. Next up, NIO is a new player, electric car maker to the scene, competing with Tesla. So far it has filled out, some of you may not be familiar with this term, but what we've coined, or Zach, one of the analysts in Stockwaves, has coined as the cowabunga post-IPO pattern. And very often when companies IPO and come onto a public exchange, they are at a point in their sentiment cycle where usually they're near some sort of top. So we see this pattern a lot with IPOs where they, although may start initially higher, end up retracing and making new lows below that IPO price, often cutting that IPO price by at least half before finding a bottom and then starting a new uptrend from there. So this chart has basically achieved that with a possible ABC down into the recent June low here. But what we're looking for next is 5 waves up to start confirming that bottom and giving us a tradable setup. So right now we have 3 waves up. If price can hold a 4th here and get another high as a 5th, then that would give us 5 up, and then we can buy the next pullback with a little bit more confidence and set a stop underneath that June low. Moving on to Tata Motors, the move up that we have here from the more recent February low does look corrective, likely as a 4th wave, so expecting further near-term downside before a more lasting bottom is struck here. Ideally taking us down to that 618 retrace just underneath $8 as wave 5 of C. But once we do see one more lower low from here, that could put in a much more significant bottom and even set up a path to new all-time highs from there as this C wave. We have a nice positive divergence developing on the MACD and the RSI as well, and should hold if we get another low down to the 618 to add some confidence to that setup. And then finally, I wanted to look at Chrysler. I have the native chart pulled up here, but for those of you trading on the US exchange, FCAU is the ticker there. This just has more price history, so a better picture of the larger pattern. On the weekly here, it looks very convincing as a diagonal structure since the 2009 bottom, with the high that we hit at the beginning of 2018 likely completing the primary third wave. So under that expectation, I still think that further downside is needed before our primary fourth wave completes, with an ideal target back down at $8 before turning back up and heading to new all-time highs in the fifth of the larger diagonal. Not necessarily a direct straight path down to $8 from here, even could consolidate longer in a B wave, but it's typical with most fourth wave structures. It's not really as clear of a pattern to be trading until we get that move down into the $8 region to complete the fourth, and then look for a bottom after that to set up a long trade for the fifth wave higher. So expecting, again, a choppy drift down to $8, and then from there, that should set up a nice trade back up to new all-time highs as the final fifth. That's all I had for you guys today. See you again next time.